Air India, IndiGo, SpiceJet and other major airlines are pretty famous to basically pass on the miles discounts. What do you mean by miles, right? You frequently get points whenever you travel by air. Now, have you ever wondered that whatever miles the airlines are passing, is it embedded in the price, yes or no? And how is it being accounted? Let us understand. Hi, my name is Ramanujam Narayan. I am a global gap expert. I have trained and transformed more than 1000 finance professionals in my life. Now, let's get back to this particular miles discussion. Very interesting one. Take an example of IndiGo. They are providing 1000 miles to basically a traveler, okay? And that 1000 miles translate to 2000 rupees, right? Do you think this 2000 rupees is probably not included in the airline ticket cost, whatever they are charging to the customer? It's very much included. That is how the pricing works, which their finance team does and gives the ticket price to the sales guys, and sales guys sell on that price. Now this 2000 rupees of miles, is it an independent performance obligation? Yes, because it is going to have a different value to the customer. The customer gets an independent value, which is the firm principle of IFRS 15 and Ind AS 115. So when will the 2000 rupees revenue of miles be recognized by the airline industry? Interesting one, right? It will be recognized only when the customer redeems those miles and travels by air. Please remember guys, these miles are not being accounted as freebies in the books of accounts of airline industry. Erstwhile, in the Indian GAAP, the airline used to recognize the full revenue and the miles recognition was being done separately, or the discounting was being recognized separately when the actual miles were being redeemed. No, that is not allowed anymore. On day one, these miles have to be estimated by the airlines. They have to adjust the revenue on day one, and the miles will have to be parked in something known as a deferred revenue. And the miles related revenue can be recognized only when you redeem or use the miles. This is the biggest change. So initially, the EBITDA will get adverse, and subsequently when the miles are being used, the revenue recognition will be done and the EBITDA will get normalized. I am sure you would have got value as far as this discussion is concerned, because this practical aspects and this practical issues keeps on coming in your daily life. Subscribe to my channel Finance First.